Just when we thought we managed to see some strength come through, it's been pretty short-lived. The rand back above the 740 mark this morning. What are you making of the weakness that's filtered through today?
Morning, Alishia. Well, the rand's weakness certainly doesn't come as any surprise. It actually started off yesterday on the back foot as well, and has been on the back foot for most of this week. That brief strength that we saw come through into the rand was, as we discussed yesterday, the current account was going to be a big factor for the rand's movements yesterday. And in the event, the current account deficit came in slightly better than market expectations. So the rand enjoyed a brief reprieve there. But of course, Asian markets opened down this morning, and in the morning looked like US equity futures are pointing to a negative opening on US markets as well. So it seems that risk aversion is very firmly back on the cards, and of course one would always expect the rand to weaken in that event, and that's certainly what's happening at the moment. As you mentioned, it's broken through the 740 range, and our initial target range our initial target point this morning was the 738 level. So since it's broken through that, we would be looking for a move to 752 in the short term. But of course, a lot depends on today's data flow.
Of course, and also those risk aversion levels moving forward from here on out, because it's in that context that we had Citi in a note to clients this morning saying that further risk aversion would adjust its fair value level to a weaker level. For now, they're seeing fair value at about 723. Where does that sit in your books?
We think that the rand is probably going to weaken from here on out. Of course, a lot then depending on prevailing risk aversion, and primarily that would be related to what happens in Europe. But we think that those days are probably behind us. As indicated, we would expect the rand to move to about a 752 level in the short term, which is of course quite a way off the 723 that you mentioned.
Of course. Well, we have got Finance Minister Pravin Gordhan briefing the media today, and the market will be watching specifically for any comments on whether South Africa is contemplating buying a Eurozone debt or not at this stage. A good idea in your books or not? Because we've been having this discussion ahead of the break, and we had Grant Watson at Omexa saying that he's certainly happy that we have had no comment coming through from the South African Reserve Bank just yet.
Well, I wouldn't go as far as to make a call on whether it would be a bad move or not, but certainly it is an interesting turn of events that now the BRICS countries are increasingly being turned to, or appear to be considering also helping the Eurozone with their debt problems. And I think it's really just a reflection of the fact that these countries are heavily invested in what happens to Europe. As we've seen, when the US and Europe go into decline or have economic problems, that of course is going to impact on all of the countries in the BRIC group, because these two regions make up very important export destinations, and of course have very big impacts on global growth. So of course it would make sense for these countries, which are also emerging powers, to then try and participate in what's happening in global events, particularly when it relates to the global economy. So of course we'll have to wait and see what the finance minister says, but it would be a very, very interesting turn of events if South Africa were actually to participate in this bond buying.
Is it a route that South Africa can afford to go down?
That is going to be a very interesting question, because the question of affordability obviously encompasses questions of, can we afford it literally in terms of the fiscal balance, but you've also got to balance that against South Africa, the role that South Africa wants to play on the international scene, and then the corollary is, can we afford not to? If South Africa wants to play a bigger role on the African continent or globally as part of BRICS, then sometimes you're called upon to do things that may not necessarily be in your short-term interests, but maybe you take a long-term view on how this will play out.
Well, of course, we've seen since pressure coming through on the euro as Eurozone debt problems persist and continue to plague that market. We were chatting about how the US seems to have stepped into the background right now, but certainly those issues are still there and not going away anytime soon. Just as severe a scenario that we're looking at on that end. In that context, your view on the dollar?
Well, very interesting. As you mentioned, there has been this interplay between the problems that develop in Europe and the US, with attention sort of shifting between the two areas over the last 2 years. As far as the euro-dollar relationship is concerned, we've always been calling, or we've consistently called for that to head down to the 120 level. We saw the euro-dollar break out of that 140 to 150 area where it's been stuck for some time, and we're still targeting 120 in the next 6 to 12 months. Of course, how far far we get there will depend largely on how things pan out in Europe at this point.
We're looking forward to US retail sales numbers later this afternoon. Your broad expectations on that front?
Well, we would expect to be in line with market expectations. That's for growth of 0.2% in the month. That would be for August. But that's quite a sharp slowdown from the 0.5% growth that we saw in the previous month. Should the number come in much worse than expected, of course, that would be a huge risk event for the rand, because we'd expect to see even greater levels of risk aversion, and the rand could weaken quite substantially from those levels.